As the equities market now, the Nigerian equities markets opened the week in the green zone as the all-share index traded 0.02% higher to close at 59,000, almost at 60,000 psychological mark there. And if you take a look at the market on Monday, it shows that the market capitalization equally saw a marginal gain of 8 billion naira, closing at 32.13 trillion naira. So if that's of course the trading summary for you there. If you take a look at in terms of market breadth, closing at positive, Universal Insurance PLC gain about 10%, leading all the gainers on Monday. LLX PLC dropped by 10%, leading some losers there. But if you quickly take a look at the gainers in details now, you have Universal Insurance, Tantalizer, Unity Bank rather, Mutual Benefit Insurance PLC. You have AFT and Coco among the top gainers for the day. Flip side to the other side, LLX, John Holtz, Academy Press, recent Regency Insurance, Omertech were all in the red on Monday, opening the week very low. Okay, so let's bring in our guest analyst now. We have Christian Anyalisi, a stockbroker and investment analyst, joins us now. Thank you for joining us. We appreciate your time.
Thank you for having me.
Okay, so quickly talk to us about the mood of the market yesterday. It was marginal. So do we have a reason why we record that marginal gain at 0.02%?
Yeah, the last couple of days, like two days in the previous week, was a little bit bearish. So what happened yesterday was that the market was returning to the bullish trend. You know, given the fact that the sell down pressures that happened on Thursday and Friday would have caused some necessary adjustment. Those equities that investors sold in order to take profit, you know, have gotten to the level where they've bottomed out, so to say, and the investors will want to also take position in those stocks. So that is why we had that marginal gain of 0.03% for the all-share index, which closed at 59,016.12 points. The market capitalization also gained, like you saw, by 0.03% to close at 32.13 trillion. So, but if you look at the market yesterday across the sectors, hello, Frank.
I can hear you. Please go on.
Hello.
Yes, I can hear you. Please go on.
Okay.
Yes.
If you look at the sector analysis for yesterday, you can see that the banking sector, you know, did 2.29%. You have insurance doing 1.19%. You have the consumer NGX consumer index doing 0.5%. Oil and gas was flat at 0.0%, whereas in NGX industrial goods did 0.66%. So you can see that the sectors, for all the sectors under our gauge, that they also close in the green, which tells us somehow that the momentum is back and there are still potentials in the market that have not been explored. For example, if you look at the banking sectors, the liberalization of forex right now, you know, the forex market, the transformation that is going on there will put a lot of businesses in the hands of the banks, and for that purpose, you expect that their earnings will go up, and it's a stock that will form part of the basket of defensive stocks in the market, and that is why you're not seeing the share prices of most of those stocks, banking stocks, coming down. Rather, they are upbeat to a very reasonable extent. And similar things are still happening across some other spectrum, some other sectors of the economy, like the energy sector. With the signing of the 2023 Electoral Act, you expect that there will be more businesses, you know, in that sector that will impact companies like Geregu, companies like Transcorp and all the rest. Some of these policy initiatives that are that we are beginning to see with respect to this new regime will definitely form catalyst, for the market.
Okay.
That is it.
All right. Let's wrap it up with your projection, the outlook for today. Do you think it will sustain the marginal gain that was recorded yesterday or Monday? So give us the outlook for today, and what is the direction currently?
I think I see that sustainability. I expect that sustainability will be there. Even if it is not much, it will be there. What we're going to be seeing going forward is going to be a mix. If we have the market going down 2 days, you could have the market coming up, for the next 2 days, while expecting that some of these policies, by the time they penetrate our transmission channels properly within the economy, that foreign investment will begin to come in. Some foreign investment analysts like Morgan Stanley is of the opinion that the policy initiatives of CBN, is in order and is very much likely to impact positively on the economy. Whereas Morgan Sachs is saying that they expect that there should be a review of domestic interest rate in order to draw in foreign investment. So, as far as the market is concerned, we should expect something more of a bullish trend than a bearish trend.
Okay. I think a good place to leave it. Thank you so much for your time, Christian Isaac Anyalesi, stockbroker and investment analyst. We appreciate you for coming on board.
Thank you for having me, Frank.